So, Rob, we've seen oil prices fall quite a bit last year. That means fuel prices have fallen for the UK consumer, even with the tax at the petrol pump. But it's got to be good for the UK consumer. What's happening to these retailers?
Well, you wouldn't know that the UK consumer is doing well at all if you look just at food retailers. As we've discussed in these very chairs many times before, Tesco, Sainsbury's, Morrison's, all of these guys are really struggling with like-for-like sales declining and margins falling radically. And if you look at the national statistics, the amount of money spent on food is barely growing at all, as slowly as it has in decades, really. On the other hand, if you look at non-food retailer, we've just had quite a Merry Christmas. And it's not just because of fuel. We are also seeing a rebound in real wages in the UK, which is helping there.
Okay, that's good. So we've got a kind of a structural problem as the discounters really take hold in the food retailing. But tell us a little bit about the department stores and, how Christmas sales went.
So if you look at the department stores, you see a very pronounced pattern of strong like-for-like sales across the group. So John Lewis did quite well. House of Fraser did quite well. M&S is a bit of the exception here. They continue to do very well in food and struggle a little bit more in non-food, but Debenhams did well. And again, so we're growing mid-single digits, high single digits like-for-like sales. Now, what we don't know, of course, how much of this is coming at the expense of margin.
Yeah, that's very important.
So what we've had so far is trading updates, and what we're looking to find out is how this translates to operating profit. The comments from companies, though, so far suggest that there might, if there's damage to margins, it's been relatively modest. But you never know until you get the proper financial reports.
Okay. And then there are also these other sort of more mid-range and more discounter retailers. How have they done? Have they done okay?
They're doing well. And again, similar levels. So your Poundlands and your B&M, they're doing pretty well. There was a little bit of margin erosion at the end of the year. But again, like-for-like sales, 5-6% up. Okay. So the picture is very good. So I think the interesting point here is what is going on at the food retailers that is not happening at the non-food retailers. And the obvious economic difference between the two groups is substitutability. Milk is milk. I don't care where I buy it, right? So the puzzle that the food guys have to unwrap is how to distinguish themselves. They can't just have this unending price war to see who can sell the cheapest milk. That's not going to work for them.
Great, Rob. Very interesting. Thanks.